Hello, traders. It is Wednesday, January 8th. We are about halfway through the trading session today. President Trump addressed the nation in a speech a little bit earlier today. Let's do a market recap right now. I want to show you this 1OP indicator because it is deadly good. By the way, I am long puts right now. I'm long the SPY 325 puts that expire this Friday, January 10th. I'm long at $1.16. We'll see what happens during the course of this video. So here's why I'm short the market. We have major resistance being tested. This is the all-time high. We've seen selling up here before. I think the market's going to be trapped in a range. Every time that we try and poke through the top of this resistance level, we see some profit taking. Asset managers are not going to be buying at the all-time high at a forward PE of 18. Even with earnings season coming up, they're not that bullish. So they will buy dips, and we've seen that. This was the reaction to the Iranian conflict yesterday. We sold off 400 points overnight and then bounced immediately. And last week when we killed the Iranian leader Soleimani, that was the new all-time high. Then we saw a sell-off Friday. We saw a sell-off Monday and a reversal with a bullish engulfing pattern. I referenced this. That was very good for the market. So let's drill down to some day trading and take a look at what's been going on during the course of the day. I tell you all the time about my 1OP indicator. If you watched my early video this morning, I told you we were bumping up. Right when I recorded the video, I said, look, we're bumping up against this resistance level, but it looks like we're going to take it out. And this 1OP indicator was starting to cross up here. However, you have to put everything into context. Context, context, context. Okay, so everything looks good right here, right now. If I'm just taking a little snapshot of a 5-minute chart. However, if I zoom out a little bit like I did on the daily chart, and if I go to the 1-hour chart, you can see all these tests up at the high fail, fail, all the time. We try and poke through, and then the market pulls back. Try and get through, market pulls back. That is a sign of resistance. Okay, so that is the type of context that I'm talking about. On the first effort, are we going to run right up through this resistance level here and blow through it? Probably not. The market's probably going to try and fade back into that range, and it's going to have to poke on it a little bit before we get through. So that's exactly what happened. I did not go in and chase these calls on that resistance level. I felt that a trading range today was likely. We had this bullish hammer right here and a nice bounce after a little pullback. And that's exactly what I referenced in the video. I said, folks, I don't want to buy right here at the high, but a dip, I would certainly buy if conditions set up properly. Well, they did. We had this nice little drop here. Look what happened to the 1OP indicator. You can see how it bottomed out, and then it crossed right there. It didn't cross here. It didn't cross here. It didn't give us a buy signal up here. It gave us a buy signal right down on that low. That's why this thing is so dang accurate. Right there. Okay? Beautiful, beautiful entry point. But the president was about to speak, so we did not buy calls. I wanted to let a little bit of that news dissipate. And as we waited, I started to see the bid grow. I did buy calls in here. I bought the January 10th expiration, the 323 calls, and I bought them for $1.80, and I sold them right up here for $2.20. Could I have gotten a lot more for them? Yes, I could have, but quite honestly, I was happy with almost a 25% return for the day, especially when I thought that we might see a trading range. So, why am I bearish right now? Well, for one, this 1OP indicator is starting to give me a bearish cross. For two, we had this breakout right here to this high, and in the process, you can see this upward sloping trend line right here. We blew through that, so we were going to see some profit taking. That first long red candle off of that high with a close on the low was enough to get my attention. Next, I said these next two bars are absolutely critical. And what I'll be looking for is I'll be looking for a lower high double top. So This is a small double top. It's not one that's been tested over a longer period of time. There are only a couple of bars between it, but enough to make me think that this resistance level might hold here. So we'll see how the put play trade plays out, but that 1OP indicator is telling me that resistance up here might hold. Now, if it does and we continue to drift lower, I'll be golden on those puts and I'll be looking to take profits once we test this breakout right here at the 324 level approximately. And the market will settle down and probably go back into the trading range. The news today was pretty good. It doesn't look like the conflict in the Middle East is going to escalate. But quite honestly, I don't think that that was priced into the market. We saw that there was a very muted reaction Friday and Monday to everything that was going on in Iran, and that tells me that the market was discounting that news anyway. There was no real concern that we were going to have boots on the ground and that this was going to turn into a full-blown war. Rather, everyone was expecting pinpoint targeted attacks by the U.S. on Iran. So, yes, the market likes the news currently, but valuations are a little bit of a problem here. Asset managers will start taking profits when we start getting to the upper end of this trading range, and so will traders. They'll be looking for these pullbacks in here. So, for today, right now we're 3 hours into trading. I am long the SPY 325 puts at $1.16 that expire Friday. I'm looking for some continued selling here. As we pull back, I'll probably be looking to take them off somewhere around the maybe $1.35 to $1.50 range. I'll have to see how accelerated the decline is. Here's what I'd like to see. I'd like to see this downward sloping trend line preserved, but because this might take time, I absolutely would like to see this high of the day preserved, and I'd actually like to see this preserved again. I don't want to make another charge at the high. And if we do charge back up through this level, I'll cover it. I'll take my losses and I'll move on. I've already got a nice winner in the bank, but I think that we're going to see weakening conditions and a weaker and weaker bid to the market, and we're going to try and retrace some of these long green bars and find support. Am I bearish long term? No, I am not. This is simply day trading. All I'm doing is day trading the SPY. That's it. So, with every one of these long green candles that appears, no problem. What I want to see is I want to see that bar finish, and there oftentimes this looks like a bullish bar, but by the time it closes, we could see actually a very bearish bar and an inverted hammer. So you have to wait for these bars to complete and then exit the trade. So that's how I'm playing the S&P 500 today. We have a nice winner in the bank. Watch this put trade. Let's see if it comes in. If you're trading the S&P 500 on a daily basis, or you trade SPY options, you really should take the option stalker trial. This indicator alone is worth the whole deal. Thank you. We'll see you soon.